Forex secret number 13. Find trades with at least a 1 to 2 risk-reward ratio. This is another basic guideline of professional traders that is not followed in practice by amateurs. If your trade setup does not provide at least a 1 to 2 risk-reward ratio, it's not a good trade no matter what your indicators are showing you. What I mean by 1 to 2 ratio is if you are willing to risk 10 pips on the downside, then you better have profit potential of at least 20 pips. How do you determine this? Use your main indicators. This is why indicators should tell you exactly what price you can enter and exit the market. If you are looking at going short at a resistance pivot on the Euro USD at 1.3500 and you are willing to risk 10 pips above that resistance point before the trade is no longer valid, then the next pivot point down and or fib level or any other indicator that you use better give you clear sailing to at least 1.3480. If you trade this way, you can be wrong 6 out of 10 times and still be profitable. Think about it. 6 losers times 10 pips each equals minus 60. 4 winners times 20 pips each equals plus 80 for a plus 20 pip net gain. 40% winners are all you need. Let's look at a live example. Okay, if we look at the USD CHF, you can see if you wanted to go short right at this resistance pivot of 1.2093, you might be willing to risk 10 to 15 pips on the downside if it breaks through there. So you need at least 20 to 30 pips on the upside. Let's say you're going to risk 15 pips. You need this thing to go down to 1.2063 to have a good 1 to 2 risk-reward ratio. You can see that this next pivot is right around at that level, so that provides a good trade setup. Now, if you were to trade the same level a little bit later on into the next day, you can see here your main pivot is 1.2074, only about 20 pips from this level. It does not provide you enough profit potential. So you would have to have your profit target down here at this next pivot level.